Welcome to the Deep Dive. Today we're going to be tackling currency trading.
Okay.
You've given us some great material to work with,
Yeah.
including excerpts from Brent Donnelly's book, The Art of Currency Trading.
Yeah.
And I'm really curious to see what kind of insights we can unearth together from this.
It's a fascinating market.
Yeah.
Very complex as well.
Yeah.
But Donnelly, he has a real knack for breaking down complex topics.
Mm-hmm.
So I think by the end of this deep dive, you'll have a really solid understanding of how currencies move,
Yeah.
what drives those changes,
Yeah.
the whole thing.
You know, I was really intrigued by that story in Donnelly's book about the trader who lost over $1 million when Trump won the election.
Oh, yeah.
I mean, talk about a wake-up call, right?
It's such a powerful example of how political events can really inject this volatility into the market.
Yeah.
But on the other hand, it also shows how resilient the market is. You know, Donnelly points out that the dollar actually rebounded the very next day, which really says a lot about the forces at play.
Right, yeah. I mean, so let's start with a little history here.
Okay.
I was actually surprised to learn that, modern currency trading as we know it really only took off in the 1970s.
Yeah.
When we shifted to that floating exchange rate.
That's right.
Before that, currencies were pegged to the gold standard, which really limited their movement.
Yeah, and you know what's interesting is that
Yeah.
Nixon's decision to actually take the U.S. off the gold standard in 1971, that really paved the way for the dynamic market that we see today.
Yeah, it's incredible how much technology has transformed the landscape.
Oh, absolutely.
And we've gone from telex machines to these sophisticated electronic platforms.
Yeah, you know what I find fascinating?
Yeah.
Is that Donnelly actually started his career back in the day when, they were using phone calls and hand signals on the trading floor.
Wow.
So he's really seen it all, and his insights into this evolution are just really fascinating.
Yeah, I mean, to be a fly on the wall during those days, right?
I know.
Okay, so let's dive into some of the basics here.
Okay.
Donnelly talks about the importance of understanding currency pairs, especially for beginners.
Yeah.
So that seems like a good place to start.
Definitely, currency pairs represent the value of two currencies relative to each other.
Okay.
They're always quoted in a specific order, base currency first, and then the quote currency second.
Okay.
So, for example, you'll see something like EUR/USD. That means the euro is the base currency,
Right.
and the US dollar is the quote currency.
Got it.
And Donnelly points out that a staggering 88% of all trades
Oh, yeah.
actually involve the US dollar, making it the dominant force in the market.
So if I'm understanding this correctly, if I think the euro is going to rise against the dollar, I would buy USD.
That's right.
But if I think the euro is going to weaken, I would sell USD,
Yeah.
even though I'm technically buying dollars.
Yeah, it can seem counterintuitive at first.
Yeah.
But once you understand that you're always trading one currency against another,
Okay.
it starts to make a lot more sense.
Yeah. Now, Donnelly, he mentions pips quite a bit in his book.
Yeah.
And I know that there are these tiny little increments of price movement, but I'm not entirely clear on why they're so crucial.
They are really fundamental because they actually determine your potential profit or loss on each trade. Donnelly gives this really interesting example
Okay.
of a trader who miscalculated pip values and ended up with a much smaller profit than they had anticipated.
Wow.
So it really highlights the importance of understanding how pips translate into real money.
Okay, that makes a lot of sense.
Yeah.
So what about the spread?
Okay.
I know it's the difference between the buying and selling price.
Yeah.
But how does it impact my trading?
Think of the spread as the transaction cost
Okay.
of trading. The tighter that spread is, the less you pay to enter and exit a trade. So Donnelly emphasizes that you really want to seek out brokers that offer competitive spreads, especially when you're first starting out.
Now, I've heard there's a difference between retail and wholesale markets when it comes to currency trading.
Yeah.
What's the distinction?
It's kind of like,
Yeah.
think of retail trading as your local grocery store
Okay.
and wholesale as buying directly from the farm.
Okay.
Retail is for individual traders like yourself, typically dealing with smaller amounts. And then the wholesale markets are really for the big players, the banks, the corporations, the hedge funds, moving millions, even billions of dollars.
Yeah, so I imagine the bigger players get preferential treatment then.
They definitely enjoy certain advantages.
Yeah.
They have access to much tighter spreads and deeper liquidity.
Okay.
Simply because of the sheer volume of the transactions that they're making. And actually, Donnelly, he spent years trading on that wholesale side. So he offers some really valuable insights into this aspect of the market.
Speaking of liquidity,
Okay.
what exactly does that mean in the context of currency trading?
So liquidity is really crucial,
Okay.
especially when you're trading based on news events. It refers to how easily you can buy or sell a currency without drastically affecting its price.
Okay.
Remember that story we talked about earlier about the trader who lost $1 million when Trump won the election?
Oh, yeah.
That's a perfect example of what can happen when a market suddenly becomes illiquid.
So in an illiquid market, it's harder to execute trades at my desired price.
Right.
And prices can fluctuate more wildly.
Exactly.
Got it.
Donnelly highlights this as a key risk factor, especially for traders who are drawn to that news-driven volatility.
Okay, so we've covered currency pairs,
Yep.
pips, spreads, and liquidity. What about actually placing a trade?
Okay.
Like, how does that work?
So there are different types of orders that you can use.
Okay.
The first one is called a market order.
And that's basically saying, just give me the best available price right now.
Okay.
It's executed instantly, but it doesn't guarantee a specific price.
So with a market order, you're kind of at the mercy of the market's current price.
That's right.
What are the other options then?
Well, there's something called a limit order,
Okay.
and that allows you to set a specific price
Okay.
that you're willing to buy or sell at, so it gives you more control.
Okay.
But it does require some patience
Yeah.
because it may not be executed immediately.
So it's a way to be more strategic about your entry and exit points.
Exactly. And then there are these things called stop-loss orders, which are absolutely crucial for risk management.
Okay.
Donnelly really stresses that stop-loss orders
Yeah.
are essentially your insurance policy in the market because they automatically close your position
Okay.
if the market moves against you by a certain amount.
So it's like setting a safety net
Yeah.
to prevent catastrophic losses. Exactly.
You're starting to see how important risk management is,
Yeah,
especially in such a fast-moving market.
absolutely.
You know, I've also heard about those more complex orders, like iceberg orders.
Oh, yeah.
I'm kind of curious how those work.
They're fascinating.
Yeah.
So iceberg orders allow you to buy or sell large amounts of currency without revealing your entire order size to the market.
Wow.
So it's a way to minimize your market impact
Okay.
and potentially get a better price.
So it's kind of like a stealth operation.
Yeah.
Keeping your true intentions hidden from the market.
Precisely.
Wow, I like that.
And Donnelly gives this great example
Yeah.
of how a large hedge fund might use an iceberg order
Okay.
to accumulate a significant position without spooking the market.
Interesting.
Yeah.
Okay, so before we really get into the nitty-gritty of fundamental and technical analysis,
Okay.
I'm curious about the structure of the FX market itself.
Hmm.
Who are the major players shaping the market?
That's a pretty diverse ecosystem. Yeah. You've got central banks, commercial banks, hedge funds, corporations, retail traders like yourself,
Wow.
all playing a role.
So it's a real mix.
Yeah. And each participant has
Yeah.
their own motivations and trading styles,
You okay?
which really contributes to the market's complexity
Yeah.
and dynamism.
Yeah.
And Donnelly dedicates a whole chapter to these relationships and how they impact market movements.
It sounds like a high-stakes game of chess
Yeah, it is.
with all these different players making moves and counter moves.
It's fascinating.
Yeah.
And understanding those forces is essential for making good trading decisions.
Okay. I'm eager to dive deeper into those forces. But before we do,
Yeah.
I want to make sure we understand how profits and losses are calculated
Right.
in this world of pips and
Yeah.
different currencies.
So Donnelly actually says it's
Yeah.
essential to understand how your P&L is calculated before you even think about placing a trade. And essentially your profit or loss is calculated as the difference between your entry price and your exit price,
Okay.
multiplied by your position size and the pip value.
So the pip value tells me how much a single pip move is worth in my account currency.
Exactly.
Got it.
It seems like a small thing,
Yeah.
but it's a crucial piece of the puzzle.
Okay.
And the pip value will vary depending on the currency pair and your position size.
Go right.
And Donnelly offers some really practical tips for calculating these pip values.
Okay.
And he emphasizes the importance of factoring in the spread as well.
Right, because that's part of my trading cost.
Exactly.
Okay, so let's start unpacking some of the different players in the FX market a little bit more.
Right.
And let's start with central banks.
Okay.
I know they wield a lot of power,
They do.
but how do their actions actually impact currency movements?
So central banks are the most powerful players in the FX market.
Okay.
They control monetary policy, which includes things like setting interest rates
Okay.
and managing the money supply.
Yeah, and these decisions can send like shockwaves through the market, right?
Absolutely.
Causing currencies to strengthen or weaken.
That's why traders hang on their every word.
Yeah.
Because even a slight change in a central banker's tone
Wow.
can trigger massive price moves.
Can you give us an example of how central banks can influence the market?
Sure, let's consider interest rate differentials.
Okay.
So central banks can actually use interest rates to attract foreign investment,
Oh.
which increases demand for their currency, leading to a stronger exchange rate.
So higher interest rates generally mean a stronger currency.
It's a key factor,
Yeah.
but it's not the only one.
Oh.
Other factors like economic growth and inflation expectations also play a role.
Got it.
And Donnelly emphasizes the importance of considering these elements in conjunction with interest rates.
Okay, so central banks are the heavyweights in the FX market. What about commercial banks? Where do they fit in?
So they kind of act as intermediaries,
Okay.
facilitating transactions between various market participants.
They're providing liquidity.
Exactly.
Right.
And they're executing trades, connecting buyers and sellers.
So they're like the brokers of the currency world.
That's a good way to put it.
Okay.
And they profit from the spread between their buying and selling prices,
Okay.
just like market makers.
Now let's talk about hedge funds.
Okay.
They have a reputation for taking big risks,
Yeah,
making bold moves in the market.
they do.
So how do they operate in the FX market?
Well, Donnelly actually spent a considerable part of his career working with hedge funds.
Okay.
So he has a lot of great insights into their strategies.
Yeah.
They're known for using sophisticated algorithms
Right.
and leverage
Okay.
to exploit market inefficiencies
Right.
and capitalize on those short-term price movements.
So they're like the high rollers of the FX casino,
In a way, yes.
constantly looking for an edge.
Yeah, and they're not afraid to make significant bets,
Right.
which can definitely contribute to the market's volatility.
Now, what about corporations?
Right.
Why are they involved in the currency market?
So corporations with international operations,
Yeah.
they face currency risk.
Okay.
They might need to buy or sell foreign currencies
Oh, hey.
to pay for goods and services or repatriate profits.
So they're essentially managing their exposure to currency fluctuations.
Exactly.
Yeah.
They're using the FX market to hedge against potential losses
Yeah.
and protect your bottom line.
Got it.
And these corporations can be significant players,
Yeah.
especially when they need to make large currency conversions.
Okay, so we've got this fascinating mix of players,
Yeah.
each with their own agendas and strategies.
Yeah.
But there's one more group we haven't mentioned yet.
Okay.
Retail traders,
Right.
like myself.
Mm-hmm.
Do we have any real impact on the market?
So with the rise of online trading platforms, retail traders have actually become an increasingly influential force.
Really?
Yeah, while an individual retail trader might not move the market on their own, their collective actions can definitely create ripples.
Wow.
And Donnelly acknowledges this shift,
Mm-hmm.
and he emphasizes the importance for retail traders to understand their role in this broader market ecosystem.
This is giving me a much clearer picture of the FX market.
Good.
Now, I'm really curious to explore those forces
Okay.
that cause currencies to rise and fall.
Mm-hmm.
Donnelly mentions 4 major global factors,
Yeah.
starting with global growth.
Oh.
So how does that impact currencies?
Global growth is a really key driver.
Okay.
When the global economy is expanding,
Mm-hmm.
it typically boosts risk appetite,
Okay.
leading investors to seek out higher-yielding assets, often in emerging markets.
Okay.
And this can cause emerging market currencies to appreciate.
So it's like a rising tide that lifts all boats,
Exactly.
including emerging market currencies.
Yeah, but conversely, when global growth slows, investors tend to flock to those safe haven currencies,
Okay.
like the US dollar or the Japanese yen.
So when the storm clouds gather, investors seek shelter in these safe haven currencies.
That's a great way to put it.
Huh?
Risk aversion takes hold, and investors prioritize stability and security above all else.
Got it. Okay. What's the next factor on Donnelly's list of global drivers?
Global interest rates.
Okay.
We touched on this earlier,
Yeah.
but it's worth emphasizing again. Donnelly really hammers this point home.
Okay.
Interest rate differentials
Yeah.
are crucial drivers of currency valuations.
Oh.
He explains that a currency's attractiveness is often tied to the interest rate it offers
Okay.
compared to other currencies.
So a country with higher interest rates is likely to see its currency appreciate
Yeah.
because investors are seeking those higher returns.
That's the general idea.
Okay.
But Donnelly reminds us that it's not always a straightforward relationship. He cautions against focusing solely on interest rates
Okay.
and stresses the importance of considering the broader economic context,
Right.
including inflation expectations
Yeah.
and economic growth prospects.
Got it. Okay. So global interest rates are in the mix.
Mm-hmm.
What's the third factor we need to consider?
Global inflation.
Okay.
Rising inflation
Yeah.
can diminish a currency's purchasing power,
Mm.
leading to depreciation.
Okay.
Donnelly explains how inflation can impact a country's trade balance,
Okay.
making its exports less competitive
Right.
and ultimately weighing on its currency.
So it's like a silent thief stealing away a currency's value.
That's a powerful image.
Yeah.
And it highlights the importance of keeping a close eye on inflation trends, both globally and within specific countries.
Okay. And finally, we have geopolitics.
Yes.
Donnelly talks about how geopolitical events can create significant uncertainty in the market.
They can really shake things up,
Yeah.
leading to those safe haven flows and some really sharp currency fluctuations.
Yeah, I can imagine.
Donnelly cites various examples in his book,
Okay.
from Brexit to the U.S.-China trade war,
Right.
illustrating how political events
Yeah.
can trigger these rapid shifts in currency valuations.
So when the world is on edge, currencies react accordingly.
Precisely.
Yeah.
Geopolitical risk is a constant wild card in the FX market,
Okay.
and it's essential to be aware of the potential impact of these events on your trading decisions.
This is giving me a much deeper understanding of these global forces at play.
Good.
But what about domestic factors?
Right.
What happens within a country can obviously impact its currency as well, right?
Absolutely. Donnelly delves into several key domestic drivers,
Okay.
including monetary policy, economic data releases,
Okay.
and even central bank interventions.
Let's start with monetary policy.
Okay.
We've already touched on this.
Yeah.
But can you elaborate on how it impacts currency values?
So monetary policy is essentially the toolkit
Okay.
that central banks use to manage their economies.
Right.
And as we discussed, interest rates are a key lever,
Mm-hmm.
but they also have other tools at their disposal,
Okay.
like quantitative easing.
Right. QE.
Yes.
That's where central banks pump money into the economy
That's right.
to stimulate growth.
Exactly. And Donnelly explains how QE can impact currency valuations because injecting liquidity into the market
Yeah.
can actually lead to depreciation.
Interesting.
He points to the Bank of Japan's extensive QE program as a case study
Okay.
for how this can play out over time.
So QE is like watering down the value of a currency.
It's an interesting analogy.
Yeah.
And conversely, when central banks start to tighten monetary policy,
Yeah.
it can lead to currency appreciation.
Okay.
And Donnelly reminds us that these policy shifts can have a domino effect on other currencies as well.
Okay, so monetary policy is a major domestic driver.
Mm-hmm.
What about economic data? How do things like GDP growth, unemployment figures, and inflation reports
Right.
impact the currency market?
So these economic data releases are really crucial
Okay.
because they provide a snapshot of a country's economic health,
Right.
and they can trigger substantial currency movements.
Okay.
And Donnelly emphasizes the importance of understanding market expectations
Okay.
versus reality.
Right.
So if the data comes in stronger than expected,
Hmm.
it can lead to currency appreciation.
Okay.
But if the data disappoints,
Yeah.
it can trigger a sell-off.
So it's not just about good news or bad news.
Right.
It's about whether the news aligns with what the market was anticipating.
Exactly. Donnelly argues that surprises are what really move the market.
Okay.
He even suggests keeping a calendar of key economic data releases
Okay.
so you can be prepared for potential volatility.
Now, what about inflation?
Okay.
We talked about global inflation.
Yeah.
But how does domestic inflation specifically impact a currency?
So high domestic inflation can erode the purchasing power of a currency. making it less attractive to foreign investors.
Mm-hmm.
And Donnelly points out that this can create a vicious cycle
Okay.
where inflation leads to currency depreciation,
Mm-hmm.
which then fuels further inflation.
So inflation is like a currency killer.
It can certainly be detrimental to a currency's value.
Yeah.
Donnelly provides several historical examples
Yeah.
of how uncontrolled inflation has devastated economies
Right.
and led to currency collapses.
And finally, we have central bank interventions.
Yes.
How do those work?
So central banks sometimes step directly into the FX market
Okay.
to influence their currency's value.
So they might buy or sell their currency
Exactly, to
All right.
try to strengthen or weaken it.
to kind of manipulate it.
Well, Donnelly describes these interventions as a last resort measure,
Okay.
often used to counteract extreme volatility or
Yeah.
speculative attacks on a currency.
So it's like the central bank stepping into the ring to defend its currency.
Exactly, and these interventions can be quite powerful,
Okay.
especially when they're coordinated with other central banks.
We've covered a lot of ground here.
We have.
From the global and domestic factors driving currency movements to the diverse players shaping the market.
Yeah.
But as we've touched upon,
Right.
there's another crucial piece to this puzzle,
Okay.
understanding the psychology of the market.
Absolutely.
And I think this is where things start to get really interesting.
Donnelly dedicates an entire chapter to behavioral finance,
Sure.
and for good reason.
Yeah.
The currency market is driven by human decisions,
Mm.
and humans are not always rational.
Right.
Emotions can play a significant role in trading decisions,
Yeah.
often leading to unpredictable outcomes.
So even with all the data analysis and the
Mhm.
technical expertise,
Yeah.
trading still comes down to human behavior.
In many ways, yes.
Wow.
Fear, greed, hope, and despair can
Right.
all influence trading decisions, sometimes overriding logic and reason.
This is where things get really interesting.
Yeah.
Can you give us some examples of how these behavioral biases
Sure.
can impact the market?
So Donnelly talks about confirmation bias,
Whoa.
where traders tend to seek out information that confirms their existing beliefs
Right.
while ignoring contradictory evidence.
So it's like seeing what you want to see,
Exactly.
even when the evidence suggests otherwise.
And this can lead to traders holding on to losing positions for too long,
Oh, wow.
hoping that the market will eventually turn in their favor.
Okay.
He also discusses overconfidence, where traders overestimate their ability to predict the market.
Yeah.
He gives this example of a trader who, after a few successful trades,
Yeah.
starts to believe that they have this system
Right.
that guarantees profits,
Yeah, we've all been there.
only to be humbled by the market's inherent unpredictability.
Right. It's a reminder that even the most skilled traders
Yeah.
are vulnerable to these biases.
Absolutely. And Donnelly emphasizes that recognizing these biases
Yeah.
and developing strategies to mitigate their influence is crucial for long-term success.
I'm starting to see how understanding psychology can give you an edge in the market.
It's one of the most valuable skills a trader can develop.
It's giving me a lot to think about.
Yeah.
I'm really eager to explore these psychological aspects further
Okay.
and learn how to apply this knowledge
Yeah.
to make more informed trading decisions.
And that's exactly what we'll do
All right.
in the next part of our deep dive.
All right.
We'll delve into fundamental and technical analysis,
Mhm.
risk management strategies,
Yeah.
and most importantly, how to develop a successful trading mindset.
I'm ready to dive in.
Let's do it.
All right.
Okay.
Okay, so we talked about the players and these global forces, swirling around out there.
Yeah.
But I want to get into the actual tools of the trade here.
Okay.
Like, how do we analyze this market
Right.
and make smart decisions?
So Donnelly advocates for kind of a two-pronged approach:
Okay.
fundamental analysis and technical analysis. They
Okay.
work together
Yeah.
to paint a more complete picture.
Okay, so let's start with fundamental analysis.
Okay.
I understand it's about looking beyond the charts
Right.
and to the real-world factors driving currency values.
That's right. It's about understanding the economic and political landscape of a country or even the global economy as a whole.
Okay.
And one of the key points that Donnelly makes is that
Yeah.
it's not just about identifying positive or negative factors.
Okay.
It's about identifying factors that the market hasn't already priced in.
So it's about finding those hidden opportunities,
Right.
things that most traders haven't caught on to yet.
That's right. He uses a great analogy in the book.
Okay.
He compares it to being a detective looking for clues.
Okay.
You're not just reading the headlines,
Yeah.
you're digging deeper, looking for those subtle signals that the market might be overlooking.
That's a great way to think about it.
Yeah.
So where do we even begin with fundamental analysis?
Okay.
What are some of the key areas to focus on?
So Donnelly suggests starting with economic growth.
Okay.
Is the economy expanding or contracting?
Yeah.
What are the leading indicators telling us?
Mm-hmm.
He really stresses the importance of understanding a country's growth trajectory,
Okay.
as it often foreshadows its currency strength.
So strong economy generally means a strong currency.
Generally, yeah.
But what about interest rates?
Okay.
I know those play a big role too.
Absolutely. Donnelly says interest rates are like a magnet for global capital.
Sure.
Higher interest rates tend to attract foreign investment,
Yeah.
which increases the demand for the currency,
Okay.
leading to appreciation.
Got 'em.
And he cites the recent example of the U.S. dollar strengthening
Mhm.
as the Federal Reserve started raising interest rates.
Okay, so keeping an eye on central bank announcements and their stance on interest rates is crucial. Okay, and then there's inflation, another crucial factor.
Yeah, Donnelly warns that high inflation can really erode the purchasing power of a currency,
Right.
making it less attractive to foreign investors.
Hmm.
And he actually reminds us of those hyperinflationary periods in Zimbabwe and Venezuela,
Oh, wow.
where currencies became practically worthless
Yeah,
due to runaway inflation.
that's a stark reminder of how inflation can just decimate a currency's value.
It really is.
Wow.
He suggests monitoring key inflation indicators,
Okay.
like the Consumer Price Index,
Mm-hmm.
to gauge the direction of inflation
Okay.
and its potential impact on a currency.
Okay, so we've got economic growth, interest rates, and inflation. What about government policies?
Okay.
Can those impact a currency's value?
Absolutely. Donnelly points out that political stability and sound fiscal policies
Mm-hmm.
are essential for a strong currency.
Okay.
He cites the example of Greece's debt crisis a few years back,
Correct.
where political instability and unsustainable fiscal policies led to a sharp decline in the value of the euro.
So it's not just about the economic numbers, it's about the overall political and economic climate
That's right.
of a country.
And he encourages traders to be aware of upcoming elections, policy changes, and geopolitical events
Yeah.
that could impact a country's economic outlook
Right.
and consequently its currency.
This is really giving me a much deeper appreciation for how complex fundamental analysis is.
It is.
It's like a multi-dimensional puzzle.
It is, and it's an ongoing process
Mm-hmm.
of gathering information, analyzing trends,
Yeah.
and just refining your understanding of the global economic and political landscape.
Okay, so that's fundamental analysis.
Right.
What about technical analysis?
Okay.
How does that approach the market?
So technical analysis focuses on historical price data and charts
Okay.
to identify trends and patterns that might predict future price movements.
Okay.
It's based on the idea that prices tend to move in somewhat predictable patterns.
Yeah.
And by studying those patterns, we can gain some insights into future price action.
So it's like looking for footprints in the sand, trying to decipher where the market has been and where it might be heading.
That's a great way to put it.
Okay, cool.
Donnelly emphasizes that technical analysis shouldn't be used in isolation,
Okay.
but rather as a complement to fundamental analysis.
So it's about using both together to get a fuller picture.
Exactly.
Okay. What are some of the key tools and indicators used in technical analysis?
Okay.
I've heard terms like support and resistance levels, moving averages, momentum indicators.
Those are some of the core tools.
Okay.
So Donnelly explains support and resistance levels
Yeah.
as price points where the market has historically found it difficult to break through.
Okay.
Support acts like a floor.
Mm-hmm.
Resistance acts like a ceiling.
So if a currency breaks through a resistance level,
Yeah,
it could signal further upward movement.
that's the general idea.
Got it.
Traders often use these levels to identify potential entry and exit points for their trades.
What about moving averages?
Okay.
How do those work?
So moving averages smooth out price fluctuations
Okay.
over a specified period of time,
Mm-hmm.
helping to identify the underlying trend.
Okay.
And traders often use moving average crossovers,
Okay.
where a shorter-term moving average crosses above or below a longer-term moving average
Mm-hmm.
as buy or sell signals.
So it's like a filter that helps to cut through the noise of the daily price fluctuation and reveal that bigger picture.
Right.
Okay. And then you have momentum indicators,
Yeah,
which measure the strength of price trends.
that's right. They're useful for identifying whether a trend is accelerating or decelerating,
Okay.
helping traders to confirm their trading decisions.
So it's like having a speedometer for the market,
That's a good analogy.
showing you how fast the price is moving in a particular direction.
It's all about understanding the dynamics of price action.
Now, do traders typically use these technical analysis tools in isolation, Or is it more about combining them?
Donnelly strongly advises against relying on a single indicator.
Well,
He believes in using multiple tools and indicators in conjunction
okay.
to get a more comprehensive view of the market.
So it's about looking for confirmation from multiple sources.
Precisely. He says it's like having a team of advisors,
Uh,
each offering their own perspective on the market.
yeah.
By considering multiple viewpoints, you can make more informed trading decisions.
This is all starting to come together.
Good.
We've got fundamental analysis to understand the underlying forces driving currency values.
Right.
And then we've got technical analysis to analyze those price patterns
Yeah,
and identify potential trading opportunities.
that's a great summary.
Yeah.
But remember, no system is foolproof.
Right.
Trading involves inherent risk.
Yeah.
And even the best analysis can't predict the future with certainty.
That brings us to another critical aspect, risk management.
Absolutely.
It seems like this is where the rubber meets the road in terms of protecting your capital.
Donnelly dedicates a significant portion of his book to risk management,
Oh.
calling it the most important skill a trader can develop.
Why is it so crucial? And what are some of the key risk management techniques that traders should be familiar with?
So risk management is essential because it helps you protect your capital
Okay.
and stay in the game for the long haul.
Mm-hmm.
It's about preserving your trading capital
Oh, okay.
so you can continue to learn and improve over time.
Right.
He emphasizes that even the best traders experience losses,
Right.
but it's how they manage those losses that separates the successful ones from the rest.
So it's not just about making money. It's about not losing too much money on any single trade.
One of the key risk management techniques that Donnelly stresses is using stop-loss orders.
Okay. We've talked about those briefly.
Yeah.
They automatically close your position
Right.
if the market moves against you by a certain amount.
That's right. He likens them to an insurance policy for your trades,
Right.
limiting your potential losses and preventing a bad trade from wiping out your account.
Okay, so stop-loss orders are a must-have tool.
Definitely.
What else should traders be thinking about in terms of risk management?
Another essential concept is position sizing,
Okay.
which refers to how much capital you allocate to each trade.
Right.
Donnelly argues that risking too much capital on a single trade can
Yeah.
be disastrous,
Okay.
even if you have a high degree of confidence in the trade.
So it's about spreading your risk,
Yeah.
not putting all your eggs in one basket.
That's a great way to put it.
Okay.
He also advocates for diversification,
Okay.
spreading your risk across multiple currency pairs and trading strategies.
Yeah.
This helps to mitigate losses if one particular trade or market sector goes against you.
So don't bet the farm on one currency or one trading approach.
Exactly. And finally, he emphasizes the importance of having a trading plan,
Okay.
a written document that outlines your trading goals, your risk tolerance,
Mm-hmm.
your entry and exit strategies, and your money management rules.
So it's like having a roadmap for your trading journey,
Precisely.
keeping you focused and disciplined.
He argues that a well-defined trading plan
Yeah.
helps you avoid emotional decisions
Okay.
and keeps you accountable to your own trading principles.
This is all incredibly valuable advice.
Yeah,
I'm starting to see how risk management is not just about avoiding losses,
right.
but about creating a sustainable approach to trading.
That's a great insight.
Yeah.
Donnelly believes that consistent profitability comes from a combination of sound analysis,
Mm-hmm.
effective risk management, and a disciplined trading mindset.
Okay, so we've covered fundamental and technical analysis.
Yeah.
We've talked about risk management, and we've even touched upon the psychological aspects of trading.
Right.
It seems like we're building a really solid foundation for success in the currency market.
We are, but as Donnelly emphasizes,
Yeah.
trading is as much a mental game as it is a technical one.
Right.
Developing the right mindset is crucial for navigating the ups and downs of the market.
That's what I'm most curious about now.
Okay.
What are some of the key principles or techniques that can help traders develop a winning mindset?
That's a great question, and it's something Donnelly explores in depth in his book.
Yeah.
We'll dive into those techniques and strategies in the next part of our deep dive.
All right.
We'll talk about setting realistic goals, managing emotions, cultivating discipline, and embracing the learning process.
I'm ready to unlock the secrets of a winning trading psychology.
Let's do it.
Let's get into it. All right, bring on the mental game. We've tackled the technical side of currency trading,
Yeah.
but now I'm really interested in these psychological aspects.
Mm-hmm.
What can we learn from Donnelly about developing a winning mindset?
Well, this is where Donnelly's insights really shine.
Okay.
He argues that trading psychology is often the missing piece of the puzzle for so many aspiring traders.
Mm-hmm.
You can have all the technical knowledge in the world,
Yeah.
But if you can't manage your emotions and stay disciplined, you're unlikely to achieve consistent success.
It's like having a high-performance car but not knowing how to drive it.
Exactly.
Yeah.
Donnelly emphasizes that trading is as much about mastering yourself as it is about mastering the market.
Okay, so where do we even begin with this self-mastery?
Right.
What are some of the key principles that can help us develop that winning mindset?
Well, one of the first things Donnelly stresses
Yeah.
is the importance of having a clear understanding of your trading goals.
Okay.
Why are you trading?
Yeah.
What are you hoping to achieve?
Right.
Are you looking for short-term gains?
Mm-hmm.
Or are you focused on building long-term wealth?
So it's about having a purpose,
Exactly.
that driving force behind your trading decisions.
Having that clear purpose helps you stay focused and motivated, especially when the market throws those inevitable curveballs.
I can see how that would be really important.
Yeah.
It's easy to get swept up in the excitement or the fear of the moment,
Right.
but having that grounding purpose can keep you anchored.
Absolutely, and closely tied to that is the importance of setting realistic expectations.
Hmm.
Donnelly cautions against that get-rich-quick mentality
Right.
that often lures people into trading.
Yeah, I mean, those flashy ads promising overnight riches are pretty tempting.
They are.
But I'm starting to understand that trading is more of a marathon than a sprint.
That's precisely Donnelly's point.
Okay.
He encourages traders to focus on the process, on continuous learning and improvement, rather than chasing those quick profits.
Okay.
He reminds us that trading is a skill
Right.
that takes time and dedication to develop.
Okay, so purpose and realistic expectations are key.
Yeah.
What about managing emotions?
Okay.
I imagine that's a huge part of this mental game.
It's arguably the most challenging aspect.
Yeah.
Donnelly dedicates a significant portion of his book to strategies for managing that emotional roller coaster of trading.
So how do we actually do that?
Right.
How do we keep our cool when the market's moving against us? Or when we're tempted to chase a hot trade?
So Donnelly offers some really practical advice. First, he stresses the importance of having a predefined trading plan that you stick to no matter what. This helps to eliminate those impulsive decisions driven by fear or greed.
So it's like having a set of rules to guide your actions.
Exactly.
Preventing you from making emotional decisions in the heat of the moment.
That's right. He also reminds us of the power of stop-loss orders.
Right.
We talked about them before.
Yeah.
But in the context of emotional control, they become even more crucial.
Right, because they take the emotion out of the equation. You're setting those boundaries up front.
Exactly.
So you're not making decisions based on fear when a trade goes against you.
Another technique Donnelly suggests is to keep a trading journal.
Okay.
He believes that recording your trades and the rationale behind them can really help you identify patterns in your own emotional decision-making.
So it's a way to become more self-aware.
Exactly.
And understand those triggers that might be leading to those impulsive or irrational trading behaviors.
That's right. And it allows you to learn from your mistakes, which is essential for growth as a trader.
Okay, so having a trading plan, using stop-loss orders, and keeping a trading journal are all valuable tools for managing emotions.
Yeah.
What else can we do to develop that winning mindset?
Donnelly emphasizes the importance of taking breaks, stepping away from the market when needed. Trading can be mentally and emotionally draining.
Yeah.
So it's crucial to give yourself time to recharge.
It's like any other skill, you need time to rest and recover to avoid burnout.
Exactly. He suggests incorporating mindfulness techniques like meditation or deep breathing exercises into your routine. These practices can help calm the mind and improve focus.
I'm seeing a recurring theme here.
Yeah.
Trading is not just about analyzing charts and crunching numbers. It's about managing your mental and emotional state.
Absolutely. And another key element Donnelly highlights is discipline.
Okay.
It's about sticking to your trading plan, even when it's tempting to deviate. It's about resisting those impulsive urges and staying true to your strategy.
Discipline sounds like a muscle that needs to be developed over time.
It does.
How can we build that discipline?
Well, Donnelly suggests setting small, achievable goals
Okay.
and rewarding yourself for sticking to your plan.
Okay.
He also recommends surrounding yourself with a supportive community, whether it's fellow traders or mentors who can offer guidance and encouragement.
It's interesting how this ties back to the idea of having a purpose.
Yeah.
If you have a strong enough reason for trading, it can fuel that discipline.
That's a great connection.
Yeah.
And finally, Donnelly emphasizes the importance of embracing the learning process.
Okay.
Trading is a journey, not a destination.
Yeah.
There will be setbacks along the way.
Yeah.
But it's how you learn from those setbacks that determines your ultimate success.
So it's about having a growth mindset, viewing those losses as opportunities to learn and refine your approach.
Precisely. Donnelly reminds us that even the most successful traders have experienced their share of losses.
Right.
It's their ability to adapt, to learn from those experiences that really sets them apart.
This has been an incredibly insightful deep dive into the world of currency trading.
It has.
I feel like I have a much better understanding of not just the technical aspects, but also the psychological aspects of this market.
Donnelly's book offers a wealth of knowledge and practical advice for traders of all levels. And his emphasis on the importance of a sound trading psychology is a valuable lesson for anyone looking to succeed in this challenging and rewarding market.
To our listeners, if you're at all fascinated by currency trading, I highly recommend checking out Brent Donnelly's The Art of Currency Trading.
Yeah, it's a great resource.
Yeah.
For anyone looking to develop their skills and navigate the complexities of this market.
Absolutely. And remember, as Donnelly emphasizes, success in trading is not just about having the right tools and strategies.
Right.
It's about cultivating the right mindset. Good luck on your trading journey.